data we should fill in the clauses. Okay.
Yes.
Today we'll try to cover the clause by clause analysis. So in our last session, we have started our discussion from the basics of GST, the importance of GSTR 9 and 9C return. What are the documentation which is required to prepare the GSTR 9 and 9C return in a very effective way? Will we have also covered the documentation, like we should take the consolidated GSTR-1, GSTR-3B, the trial balance, the audited financial statement, and the system generated financial statement. We have also done how to cross verify the data which has been generated from the system, that is accounting system. Okay. Then after we have started our discussion from the GSTR-9, that is if your turnover is 2 crore or more, in that case there will be requirement to file the GSTR-9 return, and that turnover is to be considered PAN based. Okay, this is not GSTN based. Suppose you have 3 GSTN, one GSTN 80 lakhs, another GSTN 1 crore 20 lakh, third GSTN 60 lakh. In that case, consolidated turnover exceeds 2 crore. So for all the 3 GSTNs, your GSTR-9 will be applicable. That point also we need to keep in our mind. Okay, many times there may be chances that we forgot to file the GSTR-9 return because the turnover is below 2 crore. So we just need to check the turnover consolidated PAN wise. Okay, that is the important thing that we need to keep in our mind. So with that, then after, while filing the GSTR-9 return, first there will be a reconciliation of sales. Okay, sales, there may be bifurcation as taxable sales and not taxable sales. Under not taxable category, we have covered the nil rated, non-GST exempted, and the zero rated supply without payment of tax, special economic zone, and export. Under taxable category, we have B2B, B2CS, export with payment of tax, and special economic zone with payment of tax. There may be chances that after making the supply, there will be requirement of reduction of output tax liability or enhancement of output tax liability due to credited debit note. So that we need to cover. Okay. Then after we have started our discussion from the perspective of input tax credit, and this year onwards, government has given a very special option for all of us. Okay, a special facility I can say, and this facility is much needed. Okay, in that particular facility, they have given a particular table 6A1. Through this 6A1, we can show the figures, the ITC, which is related to preceding financial year claimed during the current financial year, because earlier the same facility was not available, and due to that there may be certain confusions, and whenever there will be litigation, we need to go for a lot of issues for the. Sir, my voice is clear now? Just confirm me once in the chat box that my voice is clear. My voice is audible. Okay, thank you. So, thank you, sir. So we just need to keep that point in our mind. With that, after segregation of the input tax credit related to preceding financial year, the ITC will only related to the current financial year. So we have to provide a bifurcation: input, capital goods, input service. From domestic market, there may be chances I am paying the tax under reverse charge mechanism. So unregistered person, registered person, and there may be chances I am claiming the input tax credit on account of import of goods and services under reverse charge mechanism. So that also I need to show separately, and there may be chances the ITC on on account of input service distributor, that also we need to show it separately. So we have covered this part in our last session. Our today's session is a technical session. Okay, so if you have any query, any concern, you can put it in the chat box after 30 minutes. Okay, because for first 30 minutes I just want to cover the content. Okay, and today we'll just try firstly to take a comfort zone from the perspective of content. Okay, for your queries we'll try to take by today, or if there will be a requirement, we may plan a separate session of 45 minutes or 30 minutes or 1 hour for the queries. Okay, because I know very well that in this GSTR-9 and 9C we all have a lot of queries. Okay, so stay assured your each and every query will be resolved. Okay, and you may post your queries in the WhatsApp group as well. We'll enable the chat in the WhatsApp group by today, but I request each one of you, don't share any marketing content in that WhatsApp group, because that WhatsApp group is purely for the discussion of GSTR-9 and 9C. Okay, yesterday we have blocked the chat. The reason one, there were certain marketing content. Okay, so I request each one of you, those who are there in the group, no marketing content should be there. So be ready with your pen, paper and notebook and start our discussion from the next clause. Okay, now we'll go for clause by clause analysis of GSTR-9, from where we need to take the data, what is the relevant section, and what type of fields, what type of data we need to report in that we'll discuss. Now, ITC on account of ISD we have already done. Now we have amount of ITC reclaimed under the provision of the Act. So first thing, what do you mean by reclaimed? Reclaimed means there is a specific provision as per the second proviso of section 16 subsection 2. If you want to mark the section, I request you can do. Okay. Although I will provide you an Excel file in which complete thing has already been filled. Okay. So reclaimed means section 16 subsection 2 second number proviso says that if you will not make the payment to your creditors within 180 days, you have to reverse the input tax credit. And when you will make the payment to your creditors, in that case you will be eligible to claim the input tax credit. Yes, so regarding this reclaimed, part, suppose in the preceding financial year, you have not made the payment to the creditors within 180 days, so you have reversed the input tax credit. And in the current financial year, you have made the payment to the creditor, so you will be again eligible to claim the input tax credit. So that type of input tax credit you have claimed in your GSTR-3B return. So now you have to show it separately in your GSTR-9 return. So that type of bifurcation is required. When we are saying that we can file the GSTR-9 return without books of accounts, it is next to impossible. We have to check the creditors as well. I suggest when you will file the GSTR-9 return, in today's session, I will also share with you certain additional documents which we need to check. Okay, for a better performance. Because if I just need to file the GSTR-9 and 9C return ordinary, anyone can file. It's just a form. But if you will file technically, in that case, there is requirement to perform certain additional tasks. Okay, so you just need to demand the age-wise creditors list, so that you can also ensure from the books of accounts of your client that client has already made the payment within 180 days. Otherwise, the ITC has been reversed. वरना होगा क्या, in future departmental authority will come and they will say, then your client will say that, sir, when the departmental authority is asking why you have not suggested the same. Okay, so we just need to ensure this thing. Tran 1 Tran credit related, so most of the time these will be nil. Okay, so ITC availed through ITC 010202A form. Sir, there may be chances that person has taken the new GST registration, okay, within 30 days from the date of liability. In that case, whatever will be the inventory which is there with the particular person as on the date of liability, the person will be eligible to claim the input tax credit. And for that purpose, there will be a form ITC 01. Okay, in that form, we are supposed to claim the input tax credit. So we need to show the figure here. There may be chances certain ITC has been transferred due to merger amalgamation. So in that case, the ITC 02 form has already been filed, and in that form we have claimed the input tax credit. So what amount of input tax credit we have claimed, that also we need to show. ITC 02A. Okay, sir, it is not possible for me to cover the complete law. Okay, but I will try that each and every line which is there in the GSTR-9 return, I will give you the explanation from law perspective. Okay. ITC 02A. This particular form is applicable when within the same state you have taken another GSTN. Okay, and you want to transfer your input tax credit from one GSTN to your newly allotted GSTN, then ITC 02A is there. Okay, and in case of that newly allotted GSTN, while filing the GSTR-9 return, you have to show the separate figures. Conclusively, we can say your ITC 01, 02, 02A is related to the claim of input tax credit in certain special circumstances. So I suggest when you are going to file the GSTR-9 return, first go for an exit meeting for your client, with your client. Ask your client that, sir, have you taken any new GSTN? We just need to ask. We just need to ask there is any change in your principal place of business, additional place of business. We just need to ask there is any change in your commodity. Have you added any new commodity? So that we can check the GSTN common portal while filing the GSTR-9 return that all the principal place of business, additional place of business are perfect. The adjacent code is perfect. Any amendment which has been done is done perfectly. That also we need to ensure, because this is not just the compliance, this is the closing of the financial year, because income tax perspective you have already done, now you are doing from GST perspective. So this GSTR-9 and 9C we should take like an internal health checkup of the client, okay, so that we can provide certain additional information, additional services to our client. ITC 010202A. Okay. Then we have the next part. Sir, in the table 6, we have talked about the claim of input tax credit. Okay. So when you are claiming the input tax credit, there may be scenario to reverse the input tax credit in certain situations. Okay. So first, I'm just going to give you a recap of the ITC, which we have shown in table 6. Okay. So in table 6, what we have done, your consolidated ITC will auto-populated from your GSTR-3B. You just need to provide the bifurcation that this amount of ITC is related to preceding financial year, which we have claimed during the current financial year in table 6A1. Then after you have total ITC, which is related to the current financial year. So you just need to provide the bifurcation, that is domestic market, import, or due to reverse charge mechanism, or there may be chances ITC on account of input reclaim or ITC 010202A. That type of bifurcation we should provide, very easy. Everyone, sir, the ITC related part is okay for everyone? Just let me know once in the chat box. Now, we have already claimed the input tax credit. Now, what about reversal? Okay. There may be chances that we have to reverse certain input tax credit in our GSTR-3B return. So that bifurcation is also required. Okay. So when I am asking any question from you regarding the concept, okay, so just confirm me in the chat box. So it will give assurance to me, as well as it is important from you. Okay, it will create certain attention in your minds that yes, you are here. Now, reversal may be on account of rule number 37, 37A, 38, rule number 39, 42, 43. So, first, rule number 37. Rule number 37 is regarding the reversal of input tax credit on account of non-payment to the creditors within 180 days. During the financial year, if you have not made the payment to your creditors within 180 days, in that case, ITC reversal is required. So you have already done in your GSTR-3B return. That reversal you should show separately in your GSTR-9 return, and for that purpose, we have the rule number 37. Rule number 37A, sir, suppose you have bought something from a particular supplier. You have claimed the input tax credit in your GSTR-3B return, but the supplier has not filed the return. In that case, you will not be eligible to claim the input tax credit. You have to reverse the same. Okay. That person has filed GSTR-1, so the same will be available in your GSTR-2B, but the person has not filed the 3B, so you will not be eligible to claim the input tax credit. So that ITC should be reversed. So for that reversal, there is requirement of 37A. Okay. If you will check the preceding year GSTR-9 return, the multiple bifurcation was not there in table 7. And due to that, we are showing the figures in other reversal part. Okay. But now government has given more bifurcation in table 7 so that each and every figure can be shown very clearly. Rule 37 is related to non-payment to creditors within 180 days. Rule 37A is related to supplier not made the payment to the government. Rule number 38 is specifically applicable in case of banking company, non-banking financial institutions. As we all know, in case of banking company and non-banking financial company, they have option to claim the 50% ITC and reverse the balance thing. Okay. They have option to follow multiple things like 42, 43, 17, 5. A lot of things are there. So they have to select the option. And in that case, they have to reverse the ITC. So that reversal will be under rule number 30. Okay, so rule 38 is related to specific applicability of the reversal provisions in case of NBFC and banking company. Rule number 39, which is applicable in case of input service distributor. In our last session, we have done a specific discussion that in case of input service distributor, the head office is going to distribute the ITC to various branches. Okay, and when branch is going to claim the ITC, that branch has to show it in GSTR-9 return separately. So suppose when the head office has distributed certain extra or wrong input tax credit, in that case, there is also requirement to reverse the ITC. So how the reversal will be done? So for that reversal, there is rule number there is rule number 39 regarding the input service distributor. Okay. Rule number 42, 43, which is applicable in case of reversal of input tax credit if you are supposed to use any goods or services for your taxable, for your exempted purpose, or you are using in the course or furtherance of business or for your personal purpose, both in such a scenario. Just wait for a single second. Just wait for a single second. So rule number 42 and 43, which is specifically when I am bought any goods or services, I am using it in the course or furtherance of business for my personal purpose and also for exempted or taxable. So I will not be eligible for the 100% input tax credit. Okay, because partially I am using for my personal purpose, partially I am using for exempted supply. So I will not be eligible for 100% input tax credit. I have to reverse some part. That reversal calculation will be done through rule number 42. Same in case I have a capital goods and I am using that capital goods for my personal purpose as well as for my business purpose, and I am using it for exempted as well as for taxable. In such a scenario, regarding that capital goods, I have to reverse the partial input tax credit. Capital goods means suppose there is a plant and machinery. From that machinery, I am manufacturing two products. One is taxable, another is exempted. Okay. So in that case, for that plant and machinery, I will not be eligible to claim the 100% ITC. I have to reverse certain amount. Okay. So that calculation will be done through rule number 43. If you have any doubt regarding the calculation of rule number 42, 43, we have a separate video on our YouTube channel. You can check it. Okay, consult with Batuk, learn with Batuk. You can search that YouTube channel. You will find the video on rule 42, 43. A lot of calculation is there, and this is very crucial and very special at all. Okay. As per section number 17, subsection 5, sir, very famous, blocked credit. Government said that you will not be eligible for the ITC for food and beverages, beauty treatment. You will not be eligible for the motor car, aircrafts. You will not be eligible. Insurance thereof, you will not be eligible for personal purpose. The same is blocked. For construction, the same is blocked. So if there will be such type of input tax credit, which you have shown in your GSTR-3 return, you have to provide the bifurcation in your 17.5. Tran 1 related ITC, which you have claimed wrongly and you want to reverse it, in that case, the reversal should be shown here. Okay. Now, most probably these two columns will be blank. Okay, because the time period has already been gone. Other reversal. If there will be a specific reversal which has not been specified above, in that case, that type of reversal you can show here. Okay, there may be chances, some amount which you have not reversed in your GSTR 3B. You have not reversed within the timeline of section 16 subsection 4. In that case, that amount you may reverse in your other reversals so that your liability will automatically create it. Okay. So 17.5 is a blocked credit. Sir, 17.5 is a blocked credit. Government has specified certain line items that if there will be a purchase of motor vehicles, your ITC will not be allowed. In case of purchase of aircraft vessels, ITC will not be allowed. But if the same is used for the training purposes, yes, ITC allowed. Further supply, ITC allowed. Passenger transportation, ITC allowed. Otherwise, ITC will not be allowed. The same is blocked under section 17, subsection 5. So during the financial year, if any type of purchase is there, the reversal is required. Rule number 37A is applicable in a specific situation when your supplier has made the supply to you. Okay, but when your supplier has made the supply to you, okay, rule number 37A, you have claimed the input tax credit, but your supplier has not paid the taxes to the government. In that case, you have to reverse the ITC. So that figure you have to show here. Rule number 38 is applicable in case of banking company and financial institution. For banking company and financial institution, they have a specific option, okay, for reversal of ITC 50%. So that reversal should be shown here. Sir, insurance claim related ITC is ineligible ITC. So why you want to claim that ITC and then after reversal, you need not to claim that input tax credit. Yes, sir. Stock insurance you can claim. Okay. For motor vehicles, you will not be eligible to claim the ITC. So this is the specific table which is related to reversals. Okay. So in this particular financial year for GSTR-9, government has given more criteria for that bifurcation for the reversal of ITC. Okay. Now, the most awaited table is there. Okay. Sir, we have given the bifurcation. The ITC which you have claimed in your GSTR-3B return, the bifurcation as ITC related to preceding financial year, and then after the current year ITC. Then after we have given the bifurcation that the current year ITC includes your domestic purchase, your international purchase, or if there will be any reversal, we have included multiple type of reversals. Now, government is saying that Mr. the ITC which you have given the details in your GSTR-9 return, just provide a comparison with GSTR-2B. Okay. So government has given the option the total ITC after reversals, the total ITC minus the ITC as per GSTR-2B, and if there will be any differences, then you have to provide the reasons. Sir, passenger transportation and you are going for a insurance? Yes, eligible. Sir, your agreement cannot override the provisions the law. Okay. If everyone is going to make that type of agreement on account of non-payment within 180 days, then everyone can skip from this provision. Okay. So government is not going to provide that opportunity. Yes, you can reverse it in your 3B of September 2025. You can do it in October 2025 as well. Okay. Now the comparison is here. Sir, rule number 37 and 37A. Rule number 37 is a specific situation. Just wait for a second. Rule 37 is related to the non-payment to creditors within 180 days. Then you have to go for reversal. Rule 37A is the specific situation in which your supplier has not made the payment of taxes to the government and you have to reverse the ITC. That is what is the basic difference. Manoj sir, just wait. Now we'll discuss about the reconciliation of 2B and ITC as per GSTR 3B. So automatically your question will done. Okay. So now other ITC related information. Here your ITC as per GSTR 2B. Here your ITC as per your GSTR 3B, you can say, after all your adjustments. Now there may be chances of difference. The first reason of the difference is that certain ITC which is available in your GSTR 2B, but you have claimed during the subsequent financial year. There may be chances that the ITC is reflected in your books of accounts. In March month, you have bought some goods, okay, on 29th of March. The same you have not received in the March month itself. So you will be eligible to claim the ITC in your April month. But in GSTR 2B, your supplier is going to upload it with the March month date. So the same will be reflected in your March month. So ITC related to the current financial year, but you have availed during the subsequent financial year, you have to show it. That is what is the one reason for the difference. Okay. We just need to think it logically so that everything will be fine. Because in our GSTR 2B, ITC will be there based on invoices. But in our 3B, we are supposed to claim based on the receipt of goods. So there may be one reason for the claim of input tax credit in the subsequent financial year. There may be chances I forgot to claim the ITC related to the financial year 2024-25 during 2025-26 within the specified period. In that case also, we have to provide it separately. Okay, that is the first reason. Then after, you have to come with the difference. Now, the reason of difference that your ITC is available in the books of accounts, but you have not availed. ITC available in the GSTR 2B, but you have not availed. The ITC is showing in GSTR 2B, but you have not availed. You have not claimed the same in GSTR 3B. Another, the ITC available in GSTR 2B, but you have not claimed because the same is ineligible. Or in case of ineligible, how you will claim? Okay, suppose you have bought certain sanitary items for personal use. In that case, you have given the GSTN, so the same will be reflected in your GSTR 2B, but the same is ineligible, so you have to provide the bifurcation. Sir, when you are generating the GSTR 2B from the accounting software, I suggest you just need to download it item wise. Okay, item reference will also be there if you will generate it from the accounting software, so that you can easily identify that your client has taken the eligible input tax credit or there is certain ineligible input tax credit, so that you can suggest your client immediately and take the corrective measures. Then after, we have import related things, okay, that we need to show. So in case of import, definitely the ITC will not be there in GSTR 2B. Because in case of import of goods, we are paying the tax under reverse charge mechanism. We are paying the taxes under reverse charge mechanism. The same will not be available in your GSTR 2B, but the same will be available in your GSTR 3B. So that is what is also one reason for the difference. Okay, so that we need to identify and show here. Then now, whatever will be your difference, the same will be classified as ITC lapsed. There may be certain positive differences that the ITC is available in your GSTR 2B, but you have not claimed. Okay, and the same now you are not supposed to claim because the timeline of section 16 subsection 4 has already done. So the ITC will become a lapsed ITC. You will not be eligible to claim that input tax credit in future. Yes, stock insurance you can claim. So this is my specific classification from GSTR 2B and the ITC which we have claimed in GSTR 3B. It's very simple. We just need to keep one logic in our mind, that what will be the reasons for the differences between GSTR 3B and 2B. The basic reason, certain input tax credit which is reflected in your GSTR 2B current year claimed during the subsequent year. So we have to show it here. Okay. Second reason, there may be chances ITC which is available but ineligible. ITC available but not availed. There may be chances some import of goods related ITC which not be there in your GSTR 2B, but the same claimed in GSTR 3B. So that is what is also one reason of difference. So we have identified, we have provided the amounts, figures, and the remaining ITC will become lapsed because you have not claimed till date. Rahul sir, if your vendor has not filed the return and not shown in your GSTR 2B, then how you can claim in October month? Okay, because now you will not be eligible to claim the ITC in excess of GSTR 2B. Now, sir, we have done our outward supply related part. We have done our input tax credit related part. Okay, we have given Dhaval sir, if ITC is reflected in your GSTR 2A, but the same is not reflected in 2B, then most probably there may be certain technical issues. Okay, so you can claim the ITC, prepare your reconciliation according to GSTR 2A as well. In case of any litigations, you can put that the ITC is reflected in 2A. All other conditions of section 16 2 has already been fulfilled. Due to certain technical issues, the same is not available in 2B. So yes, we are eligible. Okay. Now, sir, we have shown if your input tax credit in GSTR 3B is less with comparison to GSTR 2B, then the same you have not availed, you have to show the figure that this particular input tax credit which is there in GSTR 2B, but we have not availed. So the same is going to be lapsed in your hand. You will not be eligible to claim because the timeline of section 16 subsection 4 has already been done. That is what is we need to do. Okay. Although regarding the ITC related specific table, what we'll do, we'll provide you an Excel file. Okay. This session is for the explanatory purposes. We'll provide you one full Excel file in which we'll given the figures and accordingly the effect will be there. Okay. So that you all will be in a situation to get the points. Sir, in case of security services, you can pay the taxes in GSTR 3B and claim the input tax credit. Security services section 9 subsection 3 subsection 4 are specifically related to reverse charge mechanism. They have given the line items for the RCM applicability. Okay. So, sir, till now we have covered the discussion on the outward supply and the adjustment of input tax credit for paying the liability. Okay. Now, outward supply bifurcation done, inward supply bifurcation done, reversal done, comparison with GSTR 2B and 3B done, and the reasoning of the differences has already been done. Now, sir, logically, when you have paid your outward supply, when you have declared your outward supply and adjusted the same with your input tax credit, any balance figure, suppose during the particular financial year you have outward supply of 5 crore rupees, you have an input tax credit. Okay, you have an input tax credit, output tax on your outward supply is 5 crore rupees, you have an input tax credit of 4 crore and 50 lakh rupees. In that case, remaining 50 lakh rupees you have to pay through the cash ledger. Am I right? Now, at the end, the purpose of each and every form, the purpose of each and every reconciliation, the purpose of each and every compliance, at the end, the purpose is to generate the revenue, to get the revenue, to get the proper filings, to get the proper tax collections. To fulfill that specific condition, government has come up with part 4, and in that part 4 they have demanded the details of your tax liability and the payment of the tax, that is mechanism of tax. In this particular sheet, just try to check this sheet. Tax payable will be there. The same will be auto populated from your GSTR 3B, because in our GSTR 3B we are paying the taxes. Okay, so outward supply related part will come through your GSTR 1, input tax credit related part come through your GSTR 3B, and tax liability related part is also coming through your GSTR 3B. Okay, so your tax payable will be there. The tax liability, there may be chances you have paid through the input tax credit, there may be chances you have paid through the cash, and total taxes is here. Now, sir, this tax payable, this tax payable is coming from, this is your form GSTR-9. This tax payable is coming from here. Just try to understand. This tax payable is coming from here. Okay. I will take the queries after 10 to 15 minutes. I will just complete a specific topic. Then after I will take the queries. Okay. So from this specific line item, your tax payable will be generating. Okay. In this particular tax payable, we know very well. In this particular tax payable, we know very well. We have shown the B2B related things. Okay. We have shown the credit and debit note and the amendments. Okay. The tax payable is coming from GSTR-3B, but at the end, the same should be reconciled with this particular figure, because here you are putting the figures as per your books of accounts. So while filing GSTR-9 return, one thing which you need to keep in your mind, that is the figure which is there in your tax payable should reconciled with your 4N. The tax payable should reconcile with your 4N. There may be chances some amount of outward supply which you have not reflected till date, that is you have not paid during the particular financial year 2024-25, you have not shown till 30th November 2024-25. Now, while filing the GSTR-9 return, you found that on 1,50,000 rupees sales, I forgot to report. So you can report it here. You can enhance your liability, not an issue. Okay. So automatically this amount is going to be enhanced. And now when you will compare with GSTR-3B tax payable, which is coming through GSTR-3B, there may be a differences, or definitely there will be a difference. Okay. Because here you have added one outward liability which you have not shown yet. Okay. And this particular figure is coming from your GSTR-3B. So no question that the same will be included here. Okay. So you just need to adjust this particular figure according to this line item, that is 4N. And then after you have paid the taxes, sir, you have paid the taxes as per ITC and cash ledger. This is, but tax liability is this, so automatically the difference will be created here and you have to make the payment through DRC03. Just take one example and try to understand, because I know you have certain doubts on this point. Okay, so I am just going to take one example, and through that example I want to clarify something. While filing your GSTR-3B and GSTR-1 for financial year 2024-25, you have not reported a specific sales on which the tax liability is 75,000 rupees under CGST, 75,000 rupees under SGST. Okay. You have not reported it till 30th November. While filing the GSTR-9 return, you come to know that this particular amount of sales we forgot to report. Okay. So what you have done, that is B2B supply was there. So you have reported here, you have enhanced this particular figure as per your books of accounts. Okay. Taxable value, suppose X, tax liability is 75,000, 75,000. Okay. So now this will automatically affect this specific figure, that is the additional liability will be added here. But when you will compare with your GSTR-9 table 9, you will find this figure has not included 75, 75. But as in our session, we have already covered that this part we have to compare with 4N, that is this figure. So when you will compare, you will automatically find a difference of 75,000 rupees. So what you need to do, you have to enhance this figure by 75,000 rupees. And this adjustment, this is not editable fields. So this will be pre-filled as per your GSTR-3B, but you will not be able to edit anything. You will not be able to edit anything. So now your figure has been adjusted. Okay, and total taxes paid will be there, that 75 which you have introduced in the GSTR-9 itself, it will automatically create a liability here, 75. So on this particular figure you have to pay the amount through DRC03 through your cash ledger. Till financial year 2023-24, this particular field was not available. Okay, The table was ended at tax paid. Okay. And due to that, many times we have already announced the liability here, but we forgot that we need to pay something extra through DRC 03 because no information is there. But now government has created an additional field. In this particular field, if you are supposed to announce anything here due to your liability which you are declaring in your GSTR-9 return, there will be an amount which will automatically there and you have to pay through DRC 03. Sir, just confirm me once, this part 9 is okay for you or not? Everyone please, because this is important point, so I'm asking with you that yes, this point is okay for you because certain confusion is there. Yes, related to 2023-24, if you have paid any taxes in your GSTR 2024-25, in that case you have to automatically adjust the figure. Negative figure will not be there, so no additional liability will be created. Is that okay, Mahendra sir? Sir, missed turnover, Rajendran sir, if there will be a turnover which we have not shown yet, in that case, as we have already done that while filing the GSTR-9 return, we are supposed to put the figures as per our books of accounts. Suppose any turnover which has not been shown yet, in that case, you may add on here. Sir, in 4A, 4B, according to B2B, B2CS, you can show it. Sir, if you have already reported before 30th November, in that case, wait, we'll show you the table where we have to show. No input tax credit will be, yes, manually we can add, definitely. Rahul sir, just wait, we'll discuss that if any turnover which is related to 2024-25, which you have paid in 2024-25-26 within the timeline of section 16, subsection 4, then we'll discuss that where to show. Yes, sir. On the missed sales, your counterparty will not be eligible to claim any input tax credit. So this table is again a very important table for all of us. Okay, and government has made a change from the perspective of financial year 2024-25 in this particular table as well. Next, sir. Next. Suppose government has given an additional timeline that related to financial year 2024-25, if you forgot to report any sales or forgot to claim any input tax credit, you can claim it till 30th November. Okay. Now, in your table 4, outward supply, only figure will come which is related to financial year 2024-25. You have shown in 2024-25. But certain output tax which you have paid in 2025-26 or reduced in 2025-26, where to show? So government has given an option that supplies or tax declared through amendment, any supply which you are declaring, you can show it here. Or suppose due to amendments you are supposed to reduce any outward supply, in that case reduction also shown here. That includes also your credit or debit notes. Or related to financial 2024-25, any input tax credit which you have claimed during the subsequent financial year, then you have to show here. And any input tax credit which you have reversed during the financial year 2025-26 related to 2024-25, you have to show it here. That we need to ensure. Okay, so conclusively 10, 11, 12 and 13 are specifically there for a specific purpose. The ITC and outward supply which is related to financial year 2024-25 shown in 2025-26. In that case, you have to show the figures here. Okay. Now, on account of table 10 and 11, that means, sir, tax part is here now. Taxable value, CGST, SGST, IGST, every part is there in the sheet itself. Okay. So when we are showing any figure in 10 and 11, that is payment of tax or reduction of tax. So government is asking, due to your figure which you have shown in 10 and 11, there is any additional liability has been created. Okay. Because suppose related to financial year 2024-25, you have declared a turnover of 10 lakh rupees, 90,000 in July 2025. In that case, you have to show in part number 14 that on account of the amount which I have declared in 10 and 11, my tax liability is 90,000, and I have already paid the amount. But suppose any liability you have declared in your GSTR-1 return, but you forgot to show in your GSTR-3B return. In that case, you have not made the payment of taxes. So your payment figure will be 00. So due to that, your additional liability will again created and you have to pay it through DRC-03. That is also a very important point which we need to keep in our mind. Merely knowing the filing process is not sufficient for perfect filing of GSTR-9 and 9C. We should have certain technical analytical knowledge. Okay? So we just need to compare 10 and 11. If we are showing any figure, we just need to ensure tax payable should be there and paid we should compare. So 12 and 13 are related to ITC. So ITC you will automatically adjust in GSTR-3B. So no question of skip. Okay. Again we'll take the example. Sir, related to financial year 2024-25, if you forgot any sales and you are supposed to report it in August 2025 month, just for an example, 10 lakh rupees, suppose the tax liability on this figure is 90,000. Okay. So government is saying that Mr. any sales which you have reported during the subsequent financial year which is related to current financial year, we just want the assurance that whether you have paid the tax or not. So for that purpose, they are asking the differential tax paid on account of the liability which you have declared in 10 and 11, that is 90,000. Suppose you have declared the same amount in your GSTR-3B return and paid the taxes, in that case 90. Suppose you forgot to report in GSTR-3B, in that case no payment has been done. So only payable figure will be there. You have to pay through DRC-03. Is that okay, Mahendra sir? Suresh sir will discuss whatever will be the table which is optional for GSTR-9 and 9C will tell you. I think till now everything is fine for everyone. Am I right? Mahendra sir, your doubt is okay. And till now, everything is fine for everyone. The complete process, the filing, the structure of GSTR-9 and 9C is under our control. Everyone, DRC-03 will only be through cash when you are paying through GSTR-9 regarding outward liability. Sir, Mahendra sir, that I am saying that if you have already show the same in your GSTR-3B, so no difference will be there. You just need to show 90,000 payable, 90,000 paid. So no question of DRC-03. Government just asking for a confirmation that the additional liability which you have declared, you have paid the taxes or not. Sir, after paying the DRC 03, no need of any set of related things. When you are filed the GSTR DRC 03, you just need to put a language that we are paying on account of this specific liability. So 10, 11, 12 and 13 are the specific tables which is related to the current financial year, the adjustment which you have made during the subsequent financial year. The current financial year, the adjustment which you have made during the subsequent financial year. Okay. Whether it is related to outward supply, whether it is related to input tax credit. When we'll talk about outward supply, there may be probability of two scenarios. You have enhanced your output liability, you have reduced your output liability. You have claimed the input tax credit, you have reversed the input tax credit. Hence, they have given 10, 11, 12 and 13. And in 14, they are just asking that if you have declared any outward liability additionally in 10 or 11, whether you have paid the taxes or not. Sir, no reference is required. Mehta sir, no reference is required. If you have paid, you just need to show the figure payable and paid. In case of scrutiny assessment, they may demand the documents. Rahul sir, if you have reduced the ITC on account of your GSTR 3B, but counterparty has issued the credit note. So without credit note, how you can reduce the input tax credit? That is what is the first question. Okay. So in case of credit and debit note, a lot of ambiguity are there. Okay. Everyone is following the procedure as per their comfort zone. And definitely in future, whenever there will be litigation, one very specific point of litigation will be debit and credit note. So we should be very much careful. Because government is also focusing on the tracking of credit and debit note. Sir, you are reducing as per books of accounts, but how you come to know that the counterparty has issued the credit note? Because counterparty has to reduce the output tax, so counterparty is going to issue. Because credit and debit note can always be issued by the supplier. Now, this part 4 in part 6 other information will be optional. In the other information part, they are asking for the refund. Okay. During the particular financial year, if the taxpayer has claimed the refund, in that case, the bifurcation is required to be shown: total amount of refund claimed, total amount of refund sanctioned, amount of refund rejected, pending refund, or any demand which has been created. That demand of tax is to be shown due to any assessment, enforcement, the demand which has already been paid, and the demand which is pending, that we need to show. So two type of optional information is there. One is on account of refund, another is on account of taxes demand. Okay, so this table is completely optional table. If you want to provide the data, sir, GSTR1 summary which is generated from the GSTN common portal and portal amount, if there will be a difference, in that case, one thing you can do, you can manually update the same, okay, as per the perfect thing, and raise one grievance with the GSTN help desk. Okay. If you found any issue while filing the GSTR 9 and 9C return, technically take a screenshot, raise a grievance, take the screenshot of the grievance. Because in future, in case of any litigation, your documentation will play a very important role. So this specific table related to other information is on account of refund claimed. Suppose during the particular financial year, you have filed a refund application under inverted duty structure under export without payment of tax. So you have to show the amount of refund claimed. Suppose you have filed a refund application of 10 lakh rupees, 2 lakh rupees, department rejected. So you have to show refund claim 10 lakh, refund sanction 8 lakh, refund rejected 2 lakh. Very simple. Okay. And refund, if any pending, in that case you have to show. Suppose you have filed a refund application in March month, the same has not been passed in March month because April and May, so you have to show the pending figure as well. Suppose during the particular financial year, due to scrutiny, departmental authority has raised the demand of 10 lakh rupees, you have paid 8 lakh rupees, 2 lakh rupees you have not paid, still pending, so you have to show it here. Yes, if they have issued the debit and credit note, they have not filed it on GST and common portal. In that case, yes, you can do. You can reverse the input tax credit in your GSTR-3B return as you have already done during the particular financial year. In that case, no need of adjustment required from the perspective of GSTR-9. But yes, in the subsequent period, there will be a difference between the GSTR-2B, that is the effect of credit note. So you should ready with the reconciliation. Okay. Why? When department will ask that you have not reversed the ITC for this specific period, so you have to provide the details that, sir, I have already reversed based on the date of the debit note which has been provided by the person in my books of accounts, and that is the reconciliation that we need to do. Is that okay, Rahul sir? Yes, table number 15 is optional. If you want to fill, you can fill. If you don't want to fill, you are free not to provide the detail in this table. Okay, this table is optional. Although in this e-book, we have already given the reference of various notifications and circulars through which these tables are optional. So table 15 is optional. Table 16 is also optional. Table 16 is also an optional table. In the table 16, they are demanding the details. Any supply which has been received from the composition dealer, any deemed supply which has been done under section 143. 143 means suppose I have sent any goods to the job worker and not received back within 1 year. In that case, it will be treated as deemed supply. If I have sent any capital goods to the job worker and not received back within 3 years, in that case also the same will be treated as deemed supply. If these type of supply is there, in that case we have to show here. If any goods has been sent on approval basis but the same has not been received or returned back, in that case the same will be treated as supply. So this information also we have to provide, but this is also optional table. Okay, so if any purchase which is from composition, yes, Hari sir, you can adjust the same as per your books of account based on the debit and credit note which is there with you in your hand, but the counterparty has not filed on GST and common portal. The point is that when the person is going to upload in that particular month, there will be a difference. So you have to ready one reconciliation in your hand that this is the reason of difference. Sir, deemed supply means suppose I have one job worker, I am supplying the goods to that particular person for job work. Okay. I have sent the goods, but the job worker has not returned back that goods within 1 year from the supply. In that case, it will be treated as deemed supply. And the person, that is the principal, has to pay tax on that. If this type of transaction is there, we have to show it. In case if I have supplied any capital goods to the job worker and the job worker has not returned that capital goods within 3 years, in that case, the same will be treated as supply and tax is required. So this table is again an optional table. Okay. Now, HSN code-wise summary, whatever will be your outward supply and input tax credit which you have given in your GSTR-9 return. Basically, what we have done in GSTR-9 return, the same which we have covered in our basic session, a basic discussion, that is the GSTR-9 outward supply, various bifurcation, input tax credit, various bifurcation. So whatever will be the outward supply we have made during the financial year, we have to provide the HSN code-wise summary. 4 digit up to 5 crore, 6 digit above 5 crore. Okay. And outward supply, it is mandatorily required, but the HSN code wise supply for the inward supply is optional. For your purchase, if you want to provide the HSN code wise summary, you can provide. If you don't want to provide, you are free. Okay. But for outward supply, you have to provide. And sir, keep one thing in your mind while filing your GSTR-9 return, whatever outward supply related HSN code you are providing, that should be reconciled with your outward supply which you have given in your table 4 with addition which you have given in your table 10 and 11. That we need to ensure. Okay. This time, government has introduced one additional tab, which is there while filing the GSTR-9 return. Have you checked the GSTR-9 return on GSTN Common Portal? Just let me know once. How many of you have checked the GSTN Common Portal? I think many people have already filed the GSTR-9 return. So this is one additional facility which has been given by the government. Just wait for a single second. This is the facility, that is download table 12 of GSTR 1 and 1A HSN wise detail. Now you can generate the HSN wise table from this specific facility which is there on GSTN Common Portal. When you will open your GSTR-9 form, you will get this specific table. You can download it Excel, you can compare it with your books of accounts. So we just need to utilize that specific facility as well. So in our GSTR-9 return, we have done what type of documentation is required, outward supply, inward supply, various bifurcations, the optional tables like refund, tax demand, and the table number 16. The HSN code wise summary, how we can get the Excel, which is the additional facility which is available on GSTN Common Portal. Sir, just let me know once the GSTR-9 is okay for you, conceptually, technically, practically. Although when you will get the Excel file indicated all the fields, it will be very easy for you to understand the things. Okay. Everyone. Yes, HSN code wise summary net of sales. जब तक आप लोग रिस्पॉन्स दे रहे हो चैट बॉक्स में, आई एम जस्ट गोइंग टू रीड सर्टेन क्वेरीज विच इज देयर. Sir, any credit note which you have given your reference in financial year 2024-25 itself, then there will be a difference between your 3B and 2B ITC. Okay, so you just need to show it under reconciliation tab. No other clarification, no other information you have to show in 10, 11, 12, and 13. So if there will be a purchase, your counterparty has not filed. In that case, you can book it as purchase from unregistered person. Okay. So thank you for your response in the chat box. Okay. Let's start our discussion on GSTR-9C. Okay. Basically, if your turnover is 5 crore or more, in that case, there will be a requirement to file the GSTR-9C return. Sir, sales is more than 2 crore rupees unregistered, then also there will be requirement of the HSN code wise summary. Okay. So I am again and again requesting everyone, each and everyone, that sir, now the time is of litigations. So we should prepare ourselves accordingly. So when we'll file our GSTR-9 and 9C return, the same should be reflected in our working. That we need to ensure. Okay, this time as we are taking a printout of GSTR-9 which is generated, which is no, in case of purchase from unregistered person, no RCM is there. Certain specific scenario RCM is there, otherwise no, because government has already taken back that particular decision from 13th of October 2017. Okay. Now, sir, GSTR-9 is very important, and through the analysis of last 1 day and 2 day, we found a specific thing that yes, there is requirement to take the return in a very serious way. Okay. Now, this GSTR-9C is nothing. If you have prepared your GSTR-9 return perfectly, in that case, it will take very less amount of time to ready your GSTR-9C return perfectly, because this is just a reconciliation with the data which you have filed in your GSTR-9 return with your books of accounts, nothing more. Okay, we'll also conclude that particular topic in a very less amount of time, because everything has already been done. Reconciliation has already been done. When you are putting the figures in your GSTR-9, you have already reconciled with books of accounts. So now just need to reconcile it with the audited financial statement that we are supposed to do. So timeline is same, 30th December is last date. One additional information I just want to share with you. As we all know that the GST Appellate Tribunal is going to be live very soon. So we all should ready for the GST Appellate Tribunal. Okay. So we have planned a specific detailed course on GST and Appellate Tribunal around 5 hours. In that particular course, we are supposed to cover the complete drafting techniques, the complete practical implication of GST, and how we can present ourselves in face of GST and Appellate Tribunal. Okay. So this is a detailed course of 5 hours in which we'll cover each and everything from GST Appellate Tribunal perspective. Okay. Original price is very high, but for the GSTR-9 and 9C course participants, we have a special price of 199. Okay, the course is going to be scheduled for 8th and 9th of November. So if anyone wants to enroll, in that case, we'll share the link to register for that specific course through the link. Okay, for the November month, we have very cost effective courses. Okay, on 17th, we have launched one course on 700 practical questions under GST. Because when we are facing the questions, we found that these are the issues. So we have created a detailed course of 5 hours again based on question and answers. We have taken 700 plus practical and technical queries from your day-to-day practice life, and we have created a course, live course, and we have decided a price of 99 rupees only. Actual price maybe, if we'll decide, in that case 1000, 2000. But for the November month, we'll celebrating this month as a cost effective month. So we have two courses, 199 GST Appellate Tribunal, 99 the 700 practical queries under GST, and both these courses are guaranteed course. That means if you're not satisfied, you can take back your 199, 99. We are just charging this amount to ensure a presence, because if we'll give you it free of cost, the attendance will less. Hence, we have designed this specific approach that we are charging a very less amount of fees from you, so that everyone will be there because you have invested 99 or 199. Okay. So I request anyone wants to join, will share. In the GST and Appellate Tribunal, we'll take the first appeal as well. Okay. Because we'll take the drafting session, so we'll take the appeal as well. That will not merely the discussion on the GST Appellate Tribunal. That session will be completely related to appeal filing. Drafting, presenting in front of departmental authority, because everything will be based on your presentation, how to prepare the grounds, how to draft the note, the replies in front of departmental authority, everything will be covered. Okay, so we'll share the link in the group itself. Anyone wants to join, they can join. Although 8th and 9th, there may be chances we may reschedule to the next weekend, because 8th and 9th, I know that 10th and 11th is the last day to file the GSTR-3 GSTR-1 return. So there may be chances of extension, but you just need to ensure your registration should be done as early as possible. Okay. Now, let's come to our topic. Because we have very limited amount of time. GSTR-9C, that is a reconciliation statement. Okay. Again, the applicability of the GSTR-9C is completely based on your turnover, which is pen based. Okay. That means if your turnover crosses the limit of 5 crore rupees, in that case, GSTR-9C is applicable, pen based. You have 3 GSTN, 1 GSTN 2 crore, another GSTN 2 crore, third GSTN 2 crore. Pen 1, total turnover 6 crore, your GSTR-9C is applicable. That we need to ensure. There may be chances that your client has 2 to 3 forms. For one form, the client is using you to handle the compliances. There may be other professional who is going to handle the compliances for other forms. In that case, we need to ask our client, or we can also check it on GSTN common portal. There is any other GSTN is there or not on this PAN number, so that we can easily identify and we can easily suggest our client that, sir, yes, GSTR-9C is applicable on you based on turnover, so additional fees is required. Okay, that is what is also a motive. Now, sir, here we need to show the pen based turnover. This is your part second of this GSTR-9C, because part first is completely auto populated financial year, GSTL, legal name, trade name, ARN, everything, which is completely a auto populated thing. Part second is again related to your reconciliation of upward supply with the audited financial statement. Yes, below 5 crore, then no 9C is applicable. Okay. So here you need to show the turnover. Okay. Turnover of books of accounts, that is audited financial statement. And here your turnover will come from GSTR-9. Now, one suggestion from my side. Many times what we are doing, we'll first file GSTR-9, then after we are preparing the GSTR-9C. Don't do this mistake. Ready your GSTR-9 and 9C simultaneously. Okay, so that while filing the GSTR-9C return, if you found any difference, in that case, you can make note of that. You can prepare the calculations. You can make necessary adjustment with your GSTR-9. Sir, it will be your taxable value only. Whenever we are considering the calculation of turnover, it should be taxable value only. Okay. Difference between 9 and 9C. 9 is your annual return. 9C is your reconciliation statement with your audited financial statements. Okay. So this is your turnover which is coming from GSTR-9. There may be chances of difference between the turnover which is there as per your books of accounts and as per your GSTR-9. So government has also identified certain reasons for the difference. And accordingly, they have given a specific list of reasons of the differences. Just read it one by one. I am just going to share with you logic of each and every clause. We'll give 10 to 15 minutes to this specific discussion. Then after, nothing will be there. You can say your 9C has already been done. Okay. So let's start our discussion. Okay. Yes, we'll share the Excel file. Okay. Yes, your 9 will be activated after 9C. Definitely. Sir, what we'll do today, I know it is not possible to take the queries, okay, at the end, because we have just 30 minutes and we have to conclude the sessions because everyone has the deadline to take another work. Okay. So what we'll do, we'll plan a separate session of 45 minutes or 1 hour for the queries itself. Okay. So that you can ask any queries which is related to 9 and 9C. Okay. So turnover is there as per your books of accounts. Now, there may be chances of certain unbilled revenue at the beginning of the financial year. Unbilled revenue means a specific revenue, which has not been billed in the books of accounts. Hence, you just need to add that in the audited financial statement turnover so that your this amount will reconcile with your GSTR-9, because in GSTR-9 you are supposed to pay the taxes. Unadjusted advances at the end of the financial year. Sir, just try to understand each and every term. Unadjusted advances at the end of the financial year, you need to add. Why? Because as we all know, in case of advances on account of services, yes, GST is applicable. So if there will be any advances which is there, so you have already paid the GST in your GSTR-3B return, but in your books of accounts, you are not supposed to consider that advance as your sales. So the same will not be there in your turnover. So for reconciliation, once you have to add the unadjusted advances. Okay. Deemed supply under Schedule 1. What do you mean by deemed supply? Suppose you have two GSTN. From one GSTN, if you have supplied anything to another GSTN, then you have to show it here deemed supplied as per Schedule 1. Sir, just try to read the line. In case of multiple GSTN, the turnover shall be derived from the audited financial statement for the specific GSTN. That we need to ensure, so that deemed supply will be there. Okay, from one GSTN, if you have transferred anything, in that case, the same will be there in your deemed supply. If any credit note after the end of financial year but reflected in annual return, any credit note which has been issued after the end of financial year, but the same is reflected in your annual return, that means you have shown that credit note in your GSTR-9. In that case, you have to once make the adjustment in your books of accounts so that your turnover is going to be reconciled. Okay. Yes, sir, you have to file GSTR-9C. We'll share one Excel sheet in which we have given the amount, and with that, uh, everything has been explained so that it will be very easy. For today, what you need to do, just try to understand the meaning of the terms. When you will get the Excel sheet, you will automatically get the point. Okay. The session is completely designed in a technical way. Okay. So when you will get the Excel file, when you will see the figures, automatically there will be an image in your brain that, sir, that we have already done in our class. Trade discount accounted in the audited financial statement but not permissible under GST. That is called as financial discounts. So the same will not be there in GST, but the same is in your books of accounts. So you have to make the adjustment here. So difference will be there. The turnover related to April to June, no need to show. Okay. Unbilled revenue at the end of financial year, that you have to reduce, and unadjusted advances at the beginning of the financial year. At the beginning of the financial year, if there will be any unadjusted advances, that means during the last year the same is already considered in your GSTR 3B. The point is that during this year you are going to consider in your books of accounts. So you just need to reduce it from the books of accounts. So your books of accounts will automatically reconcile with your GSTR-9. Credit note accounted for in the audited financial statement but not permissible under GST. Any credit note which is not eligible for GST, so the same will not be there in your GSTR-9, but in books of accounts the same will be there. So you just need to reduce. In case of any supply which has been made from special economic zone to domestic tariff area, the same should be shown here. Any turnover which is under composition scheme. Sir, what do you mean by this specific line? There may be chances for a particular financial year. For beginning first 3 months, the person was registered under composition scheme. For remaining period, the person was registered under regular scheme. So composition turnover should be there, because in GSTR-9, the turnover will only be related to your regular scheme. No composition turnover will be there. So you have to provide the separate turnover on account of composition scheme. That also we need to ensure. The turnover on account of valuation rules, rule number 27, 28, 29, 30. There may be chances certain line item which you have shown in your books of accounts at a specific value, but as per valuation rule 27, 28, 29, the value should be different, and on the different value you have shown the GST, or you have paid the GST in your GSTR 3B. So you have to provide that difference here so that the same can be automatically reconciled. Okay, sir, which point I need to repeat? That is section 15, valuation rules or composition scheme. M point. On account of valuation, sir, as rule number 27, 28 in case of distinct person, 29 is also applicable in case of principal and agent. The value will be decided as per the GSTN provisions. So when the value is going to be decided as per the GSTN provisions, there may be chances in the books of accounts they are keeping the normal value, that is the transaction value, but valuation rules there may be certain differences. So in GST you have to consider the value as per the valuation rules. So there may be chances of difference, so you have to show it here. Foreign exchange fluctuations, as we all know, in case of foreign currency there may be difference due to valuation. Okay, we have a specific valuation rule 31 for the foreign currency as well, forex. Okay, so we just need to keep in our mind that due to forex, if there will be any differences, because in books of accounts we are just going to put the transaction value, but in GSTN records we have to check the RBI reference rate, and multiple scenarios was there. That person has taken the optional scheme or regular scheme, according to the value will be decided. So foreign exchange fluctuations will be there. That point also we need to keep in our mind. The reasons which has been given by the government, if there will be difference due to any other reason which has not been listed above, in that case we have to show it here. Sir, can you please give the example for other reason? Yes, definitely. When you will put the figure here, you will take the figure of trading account sales. But suppose in profit and loss account, there will be an interest income. There will be a interest income. On that interest income, you are supposed to pay the GST in your GSTR 3B return. So the same will be there in your GSTR 9. But the same is not there in your audited financial statement turnover because you have taken from the trading account. There will be a difference. But interest related things has not been identified in the above parts. So in that case, you have to show it here, any other difference. And when you are putting any figure in 5O, just ensure to provide a note. Just same we have provided in this particular explanation regarding point number 5O. Taxpayer has issued certain interest related debit and credit note, and net figure comes to 54 lakh, which has already been shown in profit and loss account in the financial statement. That thing we just need to. Sir, in case of supply of goods from special economic zone to domestic tariff area, the valuation should be done according to the principle, according to the authorized operations, according to the list. Okay. So in that case, there may be chances of variation, the amount which you have booked in your books of accounts and the same which you have shown in GSTR 9, because in GSTR 9, you have to follow the rules. So accordingly, there may be chances of difference. So that difference we should show under this particular line item. Foreign exchange fluctuations, sir. There may be chances one particular transaction has been done in foreign currency. Okay. So in that case, what will be the rate we have to take? How will decide the value? So value will be based on time of supply. So we have to decide that foreign currency rate and the transaction date and the time of value. So in the books of accounts, directly we are just going to do one thing. Whatever will be the actual amount we are supposed to put. But in GST record, we have to check what will be the time of supply according to the foreign currency exchange rate we have to take. We have to compare it with the RBI exchange rate, and accordingly we have to decide the value and pay the GST. So there will be difference in both. So we have to show it accordingly. Hence, I am always saying that, sir, if you want to learn the GST technically, okay, in that case, there will be a requirement to know the principles, provisions related to time of supply, place of supply, value of supply, and different circumstances. Because now the time has passed in which we'll get the client and we'll file the return, we'll take the data from accounting software, we'll upload it on GST and common portal, and we'll get our professional fees. That time is already away. Now the time is of automation. Everywhere AI is there. So we just need to make ourselves accordingly. When we are filing the returns, when we are handling the compliances, it should reflect that yes, we have sufficient amount of knowledge. And now the GST appellate tribunal is coming. Okay, so a lot of litigation will also be there, because now we have a higher authority. When a higher authority is there to listen, in that case, automatically matters will arise. Okay, so we just need to keep this point in our mind as well. We should ready ourselves from technically, conceptually, analytically. Okay. I hope this session is going to be helpful for you for filing the GSTR 9 and 9C return. Okay. If there will be any unreconciled figure, you have to provide the reason of the unreconciled figure. Up to 500, 300, 400, you can provide the reason due to rounding off. Okay. Sir, in case of capital goods, you have sold car. The same will not be there in your trading account, but in your profit and loss account, you have a profit on account of sale of car. You have to pay the GST, and the difference you should show, not listed above. So this point number 5 is specifically here for the reason which is not listed above. We need to keep in our mind. Now, sir, the table number 7, which is again very simple. Adjusted turnover after all the adjustment 5P will be there. Now there may be chances of certain turnover which is zero rated. There may be chances certain amount on which recipient is going to make the payment of taxes. There may be chances of exempted nil rated non-GST supply related amount which we have already shown in GSTR-9. Here we just need to provide the bifurcation. If 100% turnover is a taxable turnover, the difference will be only for the rounding off, which was there in your GSTR-9. So you have to cross verify. If there will be any difference on account of rounding off, the same amount should be there which you have shown above. There should be no any difference. Okay. In the Excel file, when I am going to share with you, I will also share certain clues in that Excel file that how you can ensure that the figure is perfect. And the figure which you have shown in your GSTR-9 related to zero rated supply, related to nil rated, related to non-GST supply, you have to provide it here. Okay. Now, sir, turnover taxable value already done. Now government is asking that, Mr., your turnover reconciliation is perfect. Now what we require, we just want to ensure that the tax liability is as per books of accounts or not. आपको याद रहेगा, while filing the GSTR-9 return, we have cover a specific point, that is this specific point. Okay, tax payable. Okay, as per GSTR-9. This is the figure which is tax payable as per GSTR-9. That figure will automatically reflected here the liability which has been declared in your GSTR-9. You just need to compare that liability with your books of accounts. Okay, so now what you need to do, the turnover which you have declared in your table 5, on which whatever will be your tax liability, you have to show it here. And now you just need to compare tax liability as per books of accounts and the tax liability as you have declared in GSTR-9. Hence, I am saying that while filing the GSTR-9, you first need to check that the same is as per books of accounts. So your 9C will be very easy. Okay? That we need to ensure. Sir, you will get the recordings. Okay. For last session, we have already shared the recording in the group. For today's session, also we'll try to provide you the recording by late night. So you just need to show your liability as per your books of accounts under forward charge. RC means reverse charge mechanism. Okay, because in your tax payable part, your forward and reverse charge, every liability will be there. Okay, because we have already done that this amount will come from your GSTR 3B, that is forward and reverse charge both. So we just need to provide the rate wise classification, 5%, 6%, 12%, 18%, 28%. As now 12% is not there from 22nd of September. So in the subsequent period GSTR-9C, the rate will be removed. Okay. So we just need to provide the rate wise reconciliation as per books of accounts. Okay, that we need to prepare in Excel. Now there may be one question in your mind. That, sir, how will prepare this rate wise summary from books of accounts? So just do one thing, generate the Excel file as we have already taken, okay, from our client GSTR1 in Excel. Just do one thing. In that Excel file, in B2B, put filters in GSTN and rate. Okay. When suppose your client is from Rajasthan and code is 08 for Rajasthan. In GSTN, put one filter, begin with 08. So all the CGST and SGST will be there, and put one another filter, not begin with 08. So your IGST wali liability will be there. Just do the same for B2CS as well, so that you will get the rate wise file, and you just need to prepare a sheet. We'll share one Excel sheet for that as well. So your rate wise liability as per books of accounts will also be there. Okay. Your rate wise liability as per books of accounts, and the same you should compare with your GSTR. If there will be any differences, in that case we have to provide the reason of the differences, although ideally there should be no differences, because while filing the GSTR-9, if there will be any additional liability, we are supposed to pay through the DRC 03. So we should not pay a single amount in our GSTR-9C. That we need to do. Sir, other percentage is here, you can show here. Mahendra sir, other percentage figure is here, you can show in others. Okay. And in the GSTR-9C, there is facility to put the attachments. Okay. So you can put your details in the attachments. Additional amount which you want to pay, not paid, so you can show it here. Okay. But as per my suggestion, try to prepare all the reconciliation and put all the figures in your GSTR-9 itself. No need to pay a single rupee in your 9C. Now, the most important reconciliation, that is reconciliation of your input tax credit. Here you need to put the ITC based on your financial statement, that is input tax credit as per your books of accounts. How you will get that figure? Sir, initially we have taken the GSTR 3B generated from the books of accounts. Take the total ITC from the 3B, put it here. And your GSTR 9 ITC will automatically there after all the adjustment. So now you just need to compare the ITC as per books of accounts with your ITC as per GSTR 9. So we'll try to identify the reason of the differences. Sir, RC is reverse charge mechanism. Because in GSTR-9 under tax payable, your forward and reverse charge, both taxes will be there. So we have to provide a segregation. Okay. Gayatri madam, is that okay? So audited financial statement and the GSTR-9C, there may be chances of difference. The difference may be due to certain input tax credit which was related to preceding financial year claimed during the financial year. So the same will be there. Okay. ITC booked in earlier financial year, claimed in the current financial year. So you have to show it here. There may be chances current year related input tax credit which has been claimed in the subsequent financial year. So that ITC will be here. So both amount will be reconciled. Okay. There should be no any difference. Or suppose if there will be any difference, that means you have claimed excess input tax credit with comparison to your books of accounts. So you have to reverse it in your 9C. Or if there will be any negative difference, that means you have less claimed your ITC with comparison to books of accounts. So now the ITC will not be eligible for you. You have to put a note lapse. But if you have prepared your GSTR-9 as per books of accounts, then while filing GSTR-9C, this difference will be 00 or rounding off only. Okay. But if you forgot to reverse any input tax credit in your 9, in that case, yes, definitely you have to reverse it in 9C. And if you will reverse it in 9C, you have to pay through the cash. In 9, you can adjust it through credit. That point we need to keep in our mind. Now, the next table, which is optional. Okay. Table number 14, which is optional. In GSTR-9C, just one point from my side. Whenever there will be option of unreconciled ITC, unreconciled turnover, we should try less amount should be there. 1 rupee, 2 rupee, 5 rupee, 10 rupee. No much more difference, because scrutiny assessment audit is system generated. And this is also a one criteria for selection of your case for the scrutiny assessment. Below you have marked the note. But if there will be different, system will take your case for the scrutiny. Then after once there will be a scrutiny assessment, multiple things will be there. So we should try how to avoid these things. This table number 14 is completely optional table. Okay, if you want to fill, you fill. You don't want to fill, you cannot fill. Whatever will be the input tax credit which you have claimed during the financial year, you have to provide a bifurcation that this ITC is related to purchase, freight, power and fuel, import, rent, insurance, royalties, conveyance charges, bank charges, other. You can add multiple. That facilities. So that facility is available. Okay. For 14, this is optional table. You can classify multiple things. Okay. Now, additional liability due to non-reconciliation. If you want to show any additional liability, suppose one example is there in your profit and loss account, interest income is there. Okay. And that interest is trade interest. Suppose 5 lakh rupees, and you have not issued the invoices for that for that interest, or not issued the debit note for that interest. So definitely you have not paid the GST. You have not paid in GSTR-9 itself. So while filing the GSTR-9C, you may declare that interest here. Okay, 5%, 18%, whatever will be your rate of interest as per your principal goods. If it is a trade interest, accordingly you have to pay the GST. Or any other additional liability which you want to declare, you can declare in this particular table. Okay. If there will be any error in your GSTR-9 and 9C, you will not be able to rectify it. This is the most important thing which we need to keep in our mind, that the rectification will not be possible in case of GSTR-9 and 9C. So we just need to file the GSTR-9 and 9C in a very careful manner. If there will be a single issue, we will not be able to make any corrections, and it will create unnecessary burden. And in case of assessment and scrutiny, department will directly say that you have made certain mistakes while filing the GSTR-9 and 9C, will impose general penalty on you, 25. Okay. So we just need to take care of this thing. We just need to file the GSTR-9 and 9C very perfectly. Any additional liability we can declare. With the GSTR-9C, we have to provide the copy of balance sheet, that is audited financial statement. We have to provide the profit and loss account, and we also need to provide the form 3CD. 3CD is optional. If you want to provide, you can provide. If you don't want to provide, you can avoid this. Although the term is audit report. So we should provide the 3CD, profit and loss account and balance sheet. Definitely, this form is very important, because in case of scrutiny assessment, they will first demand from you the GSTR-9 and 9C, and through that GSTR-9 and 9C, they are supposed to analyze your issues, your internal control. Okay, so we just need to keep this point in our mind. So in this particular session, in this particular 2 days course, we have done the discussion on, sir, last 3 years you can file the GSTR-9 and 9C. Usse pehle wala they have removed. Okay. Yes, ITC in the 9C is net ITC, which is eligible for you as per books of accounts. Okay. That we should show net of debit and credit note. Okay. Now, in this particular session, in this particular course, what we have done basically, okay, just give me 5 to 7 minutes. I know I have to conclude the session at 9, so I will try to conclude it by 9. Just give me 5 to 7 minutes to recap the session. Okay. And definitely we have the WhatsApp group. So for any query, any concern, feel free to post your queries in the WhatsApp group. Okay, we'll enable the chat box. Okay. Sir, form 3CD, you should upload. As per my opinion, you should upload. Because in case of scrutiny assessment, if they will demand, we have to provide. So we should upload it now. What is the issue? Sir, for income tax audit, last date is 10th of November. So we have to file it by 10th of November. So after that, when you will file your GSTR-9C return, upload. Okay, not an issue. Now, sir, in this particular 2 days course, what we have done, I have just given a special review of the GSTR-9 and 9C. I know you all are filing this particular form since last 6 to 7 years. Okay, so I have just tried to give an idea, a refreshment about this specific GSTR-9 and 9C. We have tried to cover the amendments which has been made during the particular financial year 2024-25. So in next 2 minutes, I am just going to explain you the amendments, especially which is there. So first amendment, very important amendment, which is there. The first amendment, very important amendment, that is your bifurcation of ITC, which is related to preceding financial year claimed during the current financial year in 6A1. With that, they have given an additional table, additional column in your table regarding the tax payable, that is differential tax you can show. Okay, they have also changed the term 12 and 13 of GSTR-9. Okay, just simplification, no any changes there. Okay, and they have provided an additional facility on GSTN common portal in GSTR-9 12A. You can download the HSN code wise summary. Optional tables. So optional table, we have refund related, tax payment related details, and inward supply related HSN code. And in case of GSTR-9, we have optional table, that is your classification bifurcation of purchase heads. Okay. Basically, we have started our discussion from the basics of GSTR-9, the importance of GSTR-9 from the perspective of litigation, from the perspective of compliance, from the perspective of internal control. We have also done that what documents which is required to file the GSTR-9 return smoothly, that is your consolidated 3B, consolidated 1, trial balance, books of accounts, that is audited and unaudited, system generated. We have also done our discussion that we just need to cross verify the data which you have taken from the system for the accuracy, for the internal control check. With that, we have also covered that, sir, in GSTR-9, we have to provide the bifurcation of our outward supply and input tax credit. In case of outward supply, we have to provide the bifurcation as taxable as not taxable. In case of taxable, there may be chances of B2B, B2CS export with payment of tax, zero rated supply and reverse charge mechanism and credit debit note thereof. In case of not taxable supply, there may be chances of zero rated without payment of tax, your non-GST supply, your exempted supply, and a specific supply on which recipient is liable to pay the taxes. Sir, what you need to do? You are not just here to listen me. You are here now. Your role is to visualize. When I am going for a recap, when I am using each and every line item, you just need to visualize each and every line item so that it will create the memories in your brain and you will be in situation to recall each and everything while filing your GSTR-9 and 9C. So that is your role now. Now, sir, after the outward supply bifurcation, what do we need to do? The ITC related thing. ITC, sir, auto-populated through the GSTR-3B. We just need to segregate the ITC which is related to the preceding financial year. Then your net ITC will be there which is related to current financial year. We just need to go for a bifurcation, that is domestic purchase and import. When we are talking from the domestic purchase, we just need to provide a bifurcation input service, capital goods. In case of RCM, we just need to provide unregistered, registered. Also, there may be chances ITC on account of input service distributor were reclaimed within 180 days non-payment to the creditors. So reclaim will also be there, tran to key credit. There may be chances of certain reversals on account of non-payment to the creditors within 180 days, rule number 37. In case of non-filing or non-paying of taxes by the counterparty, 37A. In case of non-banking financial company, NBFCs, 38. 39 in case of input service distributor regarding reversals, 42, 43 exempted taxable business purpose, non-business purpose, 17.5. These type of reversals we have done. Then after we have come up with the reconciliation of input tax credit with your GSTR-2B, there may be chances of difference. The reason, there may be chances some ITC we have claimed during the subsequent financial year. There may be chances ITC available but not availed. There may be chances ITC available but ineligible. There may be chances import, or there may be chances ITC lapse. Then after we have done the discussion on table number 10, 11, 12 and 13, that is the ITC and outward supply which is related to the current financial year claimed during the subsequent financial year within the timeline of section 16 subsection 4, that is 30th November. We have also talked that the tax liability which you have declared, you just need to compare it with the ITC and the cash component, and if there will be any additional liability, you have to pay it through the DRC 03. Then after we have discuss certain optional tables, that is the refund related details and the tax payment related discussion. We have also discussed the specific table in which we have to provide the details related to composition scheme, related to goods sent on approval basis. So these are the optional tables. Then after we have started our discussion on the HSN code wise summary in case of outward supply, yes, it is mandatorily required. We can compare it with 12A Excel download for the financial year, and inward supply, which is optional. Okay. Then after we have started our discussion on GSTR-9C. GSTR-9C is nothing. It is just a reconciliation with the books of accounts. We just need to take the audited financial statement turnover, compare it with GSTR-9 turnover. There may be chances of certain differences, unbilled revenue, unadjusted advances. There may be chances of credit note, trade discount. There may be chances of composition related turnover. There may be chances of foreign exchange fluctuations. There may be chances of valuation related things. And final difference, we just need to show in other differences, and we just need to provide the explanation. Then after we have done the reconciliation from the perspective of exempted, nil rated, non-GST, and the specific supply on which recipient is liable to payment the tax. Then after we have started our discussion on the rate wise classification as per books of accounts of your output tax liability with the GSTR-9 tax payable table. If there will be any differences, we have to provide the reason. Okay, how we need to get the data, that we have already shared, consolidated GSTR1 rate wise filter. Then after we have started our discussion on the input tax credit comparison with the audited financial statement. There may be chances of difference due to last year ITC, due to current year ITC claimed in subsequent financial year. Any additional liability, if you want to report, you can report. Also for ITC, you may provide a headwise bifurcation. Okay, multiple expenditure, this is completely optional table. And then after you have to sign this form, upload the documentation like your audited financial statement, and fill it perfectly. Yes, sir. Nirav, sir, perfectly right. So yesterday recording you will get today. Sir, Dhaval sir, yes, they have demanded the audited financial statement, so you have to upload it. Sir, whatever will be your feedback about the session on GS, because I know time is there. Okay, so we have concluded the session on time. Very soon you will receive a feedback link in the WhatsApp group. So I request each one of you, whatever will be your feedback about the session, just put the feedback in that particular form. And yes, you can put your feedback in the chat box as well right now, because your feedback plays a very important role, because it gives energy to me. Okay, so